Well, let's start off with IndusInd Bank. It was considered a safe bet in the banking sector with its steady growth, market share gains, coupled with good asset quality, thanks to limited exposure to large corporate NPAs. But fortunes seem to have changed a little bit for IndusInd Bank when IL&FS opened a Pandora's box of trouble. Just in yesterday's trade, IndusInd Bank dropped 7%. There's also this concern around the heightened exposure to the gems and jewelry space. But let me not dwell too much on it. Darshan Mehta is going to do that. He's joining with all the concerns surrounding the private lender. Darshan, 8% down yesterday, and now brokerages have come out and listed out the concerns as well.
Yeah, this is Macquarie, but then we did our own research and decided to find out what's exactly happening. A couple of things were known, a couple of things were not known. I think the big trigger that happened was the rights issue that failed. We'll take it one by one. It's down 30% from the all-time high, and the big drop came in yesterday, 8%. Firstly, the exposure to IL&FS, that's the big concern that there is there. Now, the bank in the second quarter made provisions of 275 crores in their books, so that was known that they have exposure to IL&FS via two entities. One of them was the Chennai Road project, and secondly was the IL&FS parent. Now, they made this 275 crore, but they didn't say what was the total exposure. That was something that was making the market uncertain, and you're seeing that slowly and steadily the share price of IndusInd Bank kept on falling because these concerns are clearly there. And since this is not known how much this exposure could be, brokerages, I was reading a Prabhudas Diladar note, and they're saying that you don't expect, they don't know what kind of exposure that is there, and that makes it difficult in case this exposure turns into an NPA. So that's the first problem, the big exposure. And remember, IL&FS has total debt of 90,000 crores among its subsidiary, but that's a problem for the entire banking sector. Now, secondly, and the most important, is this bridge loan that they gave. Now, what happened was, and this is where the real concern came in, IndusInd Bank gave a bridge loan to IL&FS, and this was before the company got rated to a default. So they gave them a 3-month bridge loan, and their commentary on the conference call was that once the rights issue goes through and there is payment that's coming, we will get our money back. Now, this didn't happen. From till the 19th, the 5th to 19th was the date when this rights issue was opened. That didn't get subscribed, so that failed. And now Money Control came out with an article saying that this will be postponed to 2019. Some of the other articles also came down. So now this money is stuck. So we don't know how much bridge finance has been done. Overall exposure to IL&FS they haven't said, but IDFC came out with a note, and they believe that 2,400 crores could be the entire exposure to IL&FS. Now, that's not small. That's almost 1.5 times their book. So if that goes into NPA, that's a big problem for IndusInd Bank. So that's the second concern of this bridge loan, what has happened, and this thing. The third concern is IL&FS Securities. Now, they are acquiring IL&FS Security. It's a known fact. But what happened was, over the weekend, ICRA placed the A1 rating of IL&FS Security under watch. So there is not a big, but again, there's a sentimental impact because of this also. Now, the management in the conference call said that, the road project to which they have the exposure, and remember, they're not naming what kind of exposure. They have just said that 275 crores is the exposure we have taken. That is enough. We won't take any more provision. But this was before the rights issue, and then the rights issue failed. So in this road project, they say it's a AAA rated project. There's no problem that is there. But analysts say that, even being a AAA road project, the reserves are not there, the financials are not there. And in India, where stressed assets are not getting sold, this will get delayed. You may not get the best price. So there could be potential provisions that they may have to take on the road project. Some of the other concern is that they have exposure to a lot of mid-sized companies. They don't have very high exposure to high leverage companies, but a lot of mid-sized companies is where they have an exposure. And UBS says that, despite growth that is there, the exposure, and if there is any problem there, that's not factored into the price. The next problem is RBI. Now, a couple of brokerages and analysts I spoke to, they are saying that, RBI may insist on banks making NPL provisions against their exposure. And if this happens, this is a big number that comes in, 1.5% that comes in, and so the NPA just goes out of the window. And the RBI divergence report is also awaited. When this will come, I don't know. But if something like in the past what has happened, when IndusInd has been fined, Yes Bank has been fined, and you know the case what happened with Yes Bank, people are now starting to doubt that. And the other concern is that if you see the second quarter numbers, the exposure on a quarter basis to the risky gems and jewelry. Now it's risky because what's happened.
Yes.
And the commercial real estate, which is failing, and what caused the crash in the NBFC, that has increased significantly on a quarter basis. And the management is not giving any proper communication in terms of what will happen after Ramesh Sokti. He is due to retire in 1.5 years now. but there's absolutely no communication. What is the succession plan? And that is having a lot of concerns among analysts. I read this in a couple of notes. So 7 points that we have highlighted. We've studied through all the notes and what to do. But that seems to be a fair concern that the street is having on IndusInd Bank.